The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good Monday morning, all you wonderful money masters and treasure hunters. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here, but mostly I treasure your presence, folks, and my outcome is always to help you to become a better money master. Absolutely here to inspire you, but mostly to lay the groundwork so that each of us can lead an inspired life, because it is all about leading an inspired life, folks. Now, my personal outcome, and I hope it's yours as well each day, is always to be able to increase my skill level. That's what we're going to do here today at TFNN. In fact, we do it all day long, 9 hours today. You've got this show, following this show, we do the Money Master Show with Tom and I, Basil Chapman. Then we go to Larry Pesavento, Daryl Martin from 1 to 2, David White from 2 to 3, Ken Shreve 3 to 4, Tom O'Brien from 4 to 6. Folks, all day long. So thank you so much for joining us. And if you are just listening in, you can always catch us at tfnn.mobi. Probably the easiest way, so that you've got us always on your mobile device out there. And, you know, if we take a look at one of those tools, actually today, because I'm going to spend more time on the markets here, you've got the markets somewhat falling apart and really at some very near, some very significant support levels here. So we're going to take a look at that. You can always give us a call, 877-927-6648. But that thought process, folks, and one of those tools that you want to make sure that you have in your bag, your treasure bag of tools, whether it's trading tools or, you know, in trading, there's 80% psychology and the other 20% just simply in your head. What does that mean, folks? It means that today's tool, that thought process is this. There are no failures. You have to repeat after me. There are no failures. There are only outcomes. And when you understand that in trading, that is a beautiful thing. When you understand that in life, that is really a beautiful thing out there. And folks, as long as each of us is learning something, we are succeeding. And that is what it is all about. So now let's go take a look at these markets out here. Let's see exactly where they're at. Oftentimes, remember, fear, right? What is fear? False evidence appearing real most of the times out there. Now, we take a look at charts out here. We're going to start with weakness. Now, if you take a look at futures, just simply what's going on, you've got the Dow off a couple hundred points, the ES Mini down 20 points, the NASDAQ off 40 points, everything down about anywhere from 1.5% to 2%. The 2% is where it is that we're going to start, because we're going to start with weakness out here. When you're taking a look at, you know, what is the market doing, you want to take a look at two different areas. You always want to look at strength, and you want to take a look at weakness. So we're going to start here with regard to weakness. That is going to be in the Russell 2000. Now, the beauty here is that, you know, if you've been following this show, you know that I'm a big proponent of leading indicators, and one of those leading indicators are candlesticks. And we take a look at the candle that we're really talking about. We're talking about one of my hammer candles, and right now it is absolutely failing. Now, we're looking at a daily chart here, so it doesn't completely fail until the close of today's session here. But that price point that you want to be paying attention to on the Russell 2000 futures contract is 774.80. Your trade right now at 773.10. So that has been broken. They knew it was going to be tested. It was either going to be the halfway point or all the way down to the bottom. They often are. We're actually in day, since that hammer was formed, we're in day 1, 2, 3, 4, 5, 6. We're in day 7. So today and tomorrow, real big, important days with regard to the pattern that is out here. Now, if you want to take a look at, you know, even just simply trend lines out there, if we just simply give it the most amount of flexibility, and we'll take a look at just simply the trend line, not a channel line, but just simply a trend line, because the channel is going to be up a little bit higher here. You can see it is also broken through that trend line. What does that really set up, folks? That sets up on the daily chart an A to B equals CD down. Where does that A to B equals CD down take you to? Well, let's go take a look at it. That A point out here on the Russell 2000 futures is going to be July 5th. That's going to be your high of 820.50. Your B point is going to be that bottom of that hammer candle. And then what's it do? It moves up into that new moon. The new moon 3P index date that occurred on July the 19th, folks. So if you don't think the lunar strategy works, you should really go ahead and place it on your chart patterns out there, as well as those P-index dates. Now, you can see that prices moving along the inside of that C to D leg. That means you've got a stronger move on that C to D leg than you do on A to B. That sets up what? That sets up more than a 1-to-1 A to B equals CD. That would take you into the 749.50 range. Now, what would you do, folks? You absolutely, on your daily chart or any chart time frame that you would use, what you would do is you would go take a look at your retracement. You take a look at your retracement off of the bottom. That's going to be June 4th. If you're taking a look at your indexes, the low out here in the Russell 2000 futures, 728.50 all the way up to that high. That's our A point. That's that July 5th date up at the 820.50. What you will also see at that 1 to 1.272, you're going to see a 0.786 retracement out there. Now, clearly, 763.60, that's your 0.618. That is your 1-to-1, 762-ish, let's say, in change. That is going to be your 1-to-1 A to B equals CD. That is out there. First, it's got to break the bottom of this hammer. Very strong area of support here. That is the last time where we really saw the bulls step in. They stepped in the following trading session as well, by giving you a bullish engulf. That was on July 13th. So this here, those two candles, very, very consistent. We're also looking at weakness. We're looking at what has turned into the weakest index out there, and that weak index right now is absolutely failing. That is setting up here, moving into that 0.618, 0.786. Oftentimes people will say, hey, I didn't get in on the trade. Should I get in now? You could get in now, folks. You could get in now. You'd have to have a tight stop, because if that hammer candle holds, which it could, and it could close back up, what's that going to do? That's going to set up moving back to the top of the range, the top of the range there being the highs on July the 5th out there. This, certainly this has been an uptrending market ever since the full moon. Yeah, it was the full moon, and it was moon conjunct Pluto as well that came in on the June 4th time frame. So still in an uptrending market, but it is breaking through critical support here. If we take a look at really what is all that about, we're going to go back. We'll take a look at the other futures, contracts that are out there. But just to try to tie this together here, certainly what's going on is you're seeing, when we were on the air on Friday, we were watching the euro just simply melt. Well, they didn't put the euro in the freezer over the weekend, and the euro really starting to pull back now, and that means the king is up and over, folks. It is up and over. The last swing point that was out there, what I do have up on my screen here is the weekly chart, and this is really important for you to take a look at and understand what is going on out here. We'll take a look at 2 weeks ago, the U.S. dollar index, and the basket's a basket of currencies, 5 currencies out there. You've got the euro, the pound, the yen, the Swedish krona, the Swiss franc out there. Maybe it's 6 currencies, the Canadian dollar as well. And when you take a look at the at 2 weeks ago, you had a high of 83.99. You're traded 84.08. Now, what you'll also see going across my screen, if you are watching on TigerTV, and if you're not, if you're listening on the radio, that's cool. You can always catch the archive of this show on Channel 9 out here. What you are taking a look at, you're taking a look at that red line. You're taking a look at that triple top. That triple top pattern that was out there that formed going all the way back into August 2010. Now, what you'll notice here on the weekly chart is once you're up over this area, if you look at the coming off of the highs going back to June 11th, 2010, those highs being at 89.10, what you'll see on this move down is you will not see a swing point until you get back up to the low of June 11th, until you get back up to 87.09. So 87.09 to 89.10, that is where King Dollar right now at the moment, if it closes here for the week, if it closes up over the triple top area, that red line out there, if it closes up, we'll say, to give it the benefit of the doubt, if it closes up above, the more difficult one would be the high from 2 weeks ago. That is at 83.99. You close up above that for the week, and what that sets up the euro moving down substantially out there. So you're going to want to pay attention to King Dollar up 50 ticks right now. Gold trading down $15. Silver off 51 cents. Those silver down about 2% right now. Really not too bad. Of course, it's in its channel lines as well out there. If we just switch over here, take a quick peek at what's going on over in Europe. So let's go switch over to Europe here real quickly. And what you can see in Europe is that the DAX busting through with conviction that uptrend channel. It got into the uptrend channel doing what? Doing a 1 to 1.272 A to B equals CD. I'll show you what that that looks like. And then it just simply gave up price on Friday. And so if we take a look at that A to B equals CD out here, coming off of the lows in the euro, the low in the euro, you'd go back to the June 5th time frame. What it made was a 1 to 1.272 A to B equals CD. That got you back inside there. You gave up price. You didn't jump through that uptrend channel until today, but you gapped over it now. You've got the euro pulling back at least into the 0.618 of that entire move up. That would take the euro down to 62.43 and change. But it is sliced through like Kerrygold butter, as if you were going to make a cup of Tiger butter brew this morning. It has sliced through that 0.382 area. Look for the euro to pull back really to the 0.786. That would be in the 6,098 price point area. 877-927-6648. Get the Dow futures off 205. ES Mini down 20. You got the NASDAQ off 43. McDonald's not having a very good Happy Meal today. They were out with numbers. They closed out at 91.58. Trading out right now at 88.77. Apple's off $10 in the pre-market. BHP Billiton closed at 64.05. They're trading at 61.51. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Hope everybody had a fantastic weekend out there. In the pre-market here, you've got trading down about 11%. PetMed Express, they closed out 11.26. They're down $1.26 right now. You've got in the up market, let's see here. He's trading up this morning on any type of earnings releases out here. You've got I don't even know how. PHG is the ticker symbol. Philips Electronics. Okay. They're up 4%. They're up 86 cents. Closed out at 19.63. Let's go to Bill in Colorado Springs. Bill, thanks for calling. Thanks for holding.
Hello.
Bill, how are you today?
I'm good, Steve. How are you?
Excellent. Excellent. Thanks. Thanks for calling. How can I help you this morning?
Hey, I had a trade set up for this FAS, but this thing has already blown through my trigger.
Okay.
Almost. Well, I got a target at 78. I was going to get in at 82 on FAS, but I don't know. Maybe too much of the move's already happened.
Too much of the move. So you were trying to. Now, FAS is the direction share bull. Is that what you had wanted to do?
Right.
Yeah.
Yes, sir.
So.
But I was short.
You're short it.
I was going short, yeah.
I see. Okay. You know what?
I was buying a few puts on it is what I was going to buy today.
I see. Okay. That's certainly an option. You can also play the FAZ. At this stage, I wouldn't be chasing it here. You want to wait, in that case there for the markets to be moving up into you, not the market moving away from you. So I can't recommend that trade for you. And when you do trade the FAS, what you want to make sure, Bill, is go over to the SPDR. Go to whatever your search engine is that you use out there. And what you want to do is you want to make sure you're taking a look at the underlying instruments in there. I'll pull it up here on TigerTV for you. And if you go over to the Spiders website, because the FAS and FAZ primarily traded off of the XLF, I believe, or just go to the Direction Shares website and pull up the holdings inside there. And what you'll find is it's a weighted ETF. And you'll want to just simply take a look at probably the top 8 or 10 stocks that are in there and understand what they are doing, what patterns they are doing out there. That is when you trade these ETFs, you want to make sure you understand what the underlying instrument is doing here. And in this case here, when you're trading those ETFs, because they are weighted structures, what you'll want to do is you want to see what the top 8 to 10 holdings in there. Usually you'll be more than 50% of the total weighting of that index in there, and then you can have better information to go ahead and place your trade, okay?
How far do you think that IWM is going to pull back?
Well, it's no different than when we were taking a look at the Russell 2000 futures contract this morning. First, it depends in this case here how that hammer candle gets held. It is holding that low 774.80. It's at 774.60. So won't know until we see how it trades during the end of the day. What I can say is on the intraday and the 30-minute chart on the ES Mini, it has completed a 0.618 pullback. It has also completed a 1 to pi, A to B equals CD. So I'm expecting that what we will see here, things always look worse than they are. I'm waiting here for a couple of bullish candles, and then what we'll see is we will likely see a bounce out of here. Not a significant bounce, but we'll see a bounce.
It's moved that whole amount, it's probably going to bounce up then?
What are you talking about? Just so I keep it clear.
You done the full move of a move. You said it's moved down to 618.
It has moved down to the 0.618. That's on the ES Mini. That's on the 30-minute. That's on the 30-minute. So to really, what's always really critical, Bill, is to just kind of get the time frames that you're looking, to trade here. So longer term right now, the U.S. dollar index, because we were taking a look at a weekly chart there. Longer term right now, that's saying that this market wants lower prices. But during that time period, you're going to see bounces up and down.
Right. Okay.
Okay.
All right. Thank you very much.
You bet, and thanks for calling. So, folks, let's just continue taking a look at the market. Since I mentioned the ES Mini, since I mentioned the 30-minute chart out here, again, this is the intraday chart that we're taking a look at. And usually I start off my day taking a look at the ES Mini here, but I thought that with the markets doing what they were doing, we needed to keep an eye on Mr. or Mrs. Weakness out there. And when we take a look at the ES Mini here, what you're seeing is an A to B equals CD down, a very powerful A to B equals CD down when you take a look at that C to D leg. Take a look at price on that C to D leg there, folks. What side of the angle is price traveling? Exactly. So even though we've gotten a larger movement in that C to D leg, it is still much more powerful than how price traveled in that A to B area. Now, what price has done? It's done a 1 to pie. That's right. Sweet apple pie out there. Cherry pie. And it has not given you a bullish signal here. So no bounce underway just yet. Maybe we won't see a bounce. Maybe we're just going to see a continued meltdown out there. 877-927-6648. We get back, we'll go see how these markets are going to open.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow off 208. S&P's off 21, composite down 63, small caps off 15. It's a composite leading the charge this morning. Out in head by nose off by 2 and 2 2/10% out there. You got Microsoft off 93 cents. You've got Intel off 2.5%, down 63 cents. Google off $9.79. Cisco off 31 bucks. Apple down 12 bucks right now. Leading the charge on the way up by NXY is the ticker symbol. Nexen Inc. on a buyout from China. I believe that is what is going on overseas. They're up a nice 52%, up 9 bucks. You've got GOI. GEOY, that's up 28%. What do they have, a merger or something? DigiGlobe and GEOI merge in a stock cash deal. That's leading the charge. You've got then mostly all just power shares here. Let's see, NRG Energy, they're up 10%, up $1.73. That is up. That's a merger. So everything that's popping here is merger-related or pro shares. No, Hasbro. There we go. So you got Hasbro up $1.87. You know, the toy companies have really been doing well. We had Mattel up. Hasbro is now up about 5%. So toys, that's a good business to be in. Leading the charge on the way down here, you've got Apple off 12 bucks, Google down 8, Citrix Systems, CTXS off $5 and change. F5 Networks off $4. Salesforce Innovation CRM off $4. Amazon off $4. This is $4 and change, folks. Ulta Salon down $4. You've got the IBM trading off $4 right now. EOG Resources off about 4. Melinex, and they will probably want to watch that stock there. MLNX. We'll go take a look at it, see how that is pulling back. That's off $3 and change. That had a big pop out there, a big island, as I recall. Alexion Pharmaceuticals off $3 and change. Again, our call number 877-927-6648 on the 30-minute ES mini chart out here. No sign of hope yet for the bulls out there, or that the price move to the downside is going to stop. And that's really all about the euro out here. You can see on the weekly chart, what you're looking at here is you're looking at a Tiger, not Tiger Gartley, just simply you can't say Tiger Gartley on a currency trade because we don't have volume out there. But what you have is you have a Gartley buy pattern that failed. When you have the Gartley buy pattern that fails, it's going to go to the next level. In this case here, that's going to be a 100% move of a move. That is going to go down into the June 11th, 2010 swing point low, 118.754. The euro trading out right now at 120.946. It does want lower prices. I suspect when it gets down to that area, it will find some degree of support out there, and that's what you'll be watching for. If we switch over to the daily chart out here, we'll put that on the daily time frame. You can see on the daily time frame what you're looking at is you're going to see a 1.272, 1.272 butterfly patterns that are out there. Let's go redraw the last one here because that says that it wants to head to the 1.618 area. 1.618 expansion of this smaller butterfly takes you down to the, well, let me just redraw it actually. It's going to be easier. Now, the easiest way to do this, folks, is that I've found is just simply take your X to your A point. Your X point on the euro is going to be the June 1st low out at 122.866. And what you'll see is the 1.618 expansion of that comes in at the 120, 120 and just a little bit of change. And you're trading right now at 129.56. So the euro wants lower price on the daily chart. What's that going to do? Going to put energy in the U.S. dollar index, which is the directional indicator. And there's no way to identify tick for tick what a tick up in the U.S. dollar index equates to in points in any of the indexes here. But as long as we're seeing the U.S. dollar index break out, that's going to put pressure on the markets for sure out here. So what that pattern actually looks like here, if we were to redraw it, which we can, let me make sure here, okay, and we'll just simply shorten it. And what you really have occurring at the same time is this larger butterfly pattern also completes somewhere near that same vicinity. So here is the smaller one, which you'll see has a 2.414 expansion. That is also it's not a primary, I wouldn't call it a primary Fibonacci number, but it is one that you often do see out there. So now if we take a look at the 1.618 expansion of the larger X to A move out here, what we'd be looking at is we'd be starting down at the lows coming in the January 2012 time frame all the way up to the high. Looks like the high was either on February 24th or the high was on February 29th. We'll go with February 29th. And what you'll see, the 1.618 is right in this area here, 1.20827. So your range here, your target range on the euro, and you can see the euro has already hit that larger one this morning. So let's just simply go ahead and draw that pattern out there. So the euro really at a critical support level. And, it's really important to understand where those critical support levels are. You don't have to get too hung up into the news that is out there. You just have to really understand the patterns. It is all about pattern recognition. And how about that? You're seeing an expansion, a pie expansion, off of a set of swing points. It says 3.45. We'll say it's close enough to 3.415. Off of the lows from March 15th. Up to the high on March 27th out there. So you can see the euro really at a very critical support area. Dow off 217 right now. Let's go take a look at some of these stocks here that are dropping. You got Chipotle on the move again. Let's go take a look at Apple. See what Apple is doing here volume-wise early in the session, obviously. So we'll take a look at Apple. APL is the ticker symbol, gapping down this morning. We take a look at volume now. Apple having set up a Gartley sell pattern. It completed that Gartley sell pattern on July the 10th. It was a 0.786 Gartley sell pattern. What does that set up for Apple? You would be taking a look at the 0.618 area of the A to D point out there. The A point on Apple being May 18th low at 528.66. That D point being the completion of the 0.786 Gartley sell out there on July the 10th. That price is $619.87. So Apple making its way to that first level, which is the 0.382, the dead cat bounce. That would be 585.03. Apple wants to get down to 563.50. When it gets down there, it's going to be testing the swing point going back to June 28th. That swing point only has 10 million shares. So as Apple moving down so far this morning, 2 million shares in the first 11 minutes of trading out there. So you got some volume here in Apple. Let's go take a quick peek and see what Chipotle is doing. CMG is the ticker symbol out there. Having just simply a horrible Friday, not having a much better Monday as well. Trading down, making a 1 to 2, A to B equals CD. But when you take a look at that price move here on that C to D leg, folks, Chipotle has further to go. Now, what Chipotle is doing, coming all the way back into that November 25th breakout area, that was where Chipotle started its last move up, going from $300 up into that 440 and change. That 440 and change was in April. So it took from November 25th to April. So what are you looking at about to the end of April? So you're looking at 5 months out there. And then it takes from the middle of April to the middle of July, so 3 months, to make it all the way back down there. Things falling faster than they rise out there. So you got big volume in here. Where is Chipotle likely going to trade to? The easiest thing is to go back to your weekly chart. You'll see that it should have some type of support in the 270-ish range, all the way down to 243 and change out there. A damaged stock, you might as well just simply take this off of your list. Anybody on television that is telling you otherwise, they're just pumping and trying to get you, they're trying to get out. And the way to do that is to get you into that stock. So just simply get that off of your radar list. I suspect it's not even on the IBD 50 any longer. Certainly won't be there after this week. If we take a quick peek here at gold, gold trading out at 1571, really, quite frankly, holding up pretty well out here. Traded to a low today of 1562. If we just simply take a look at just what the retracement would be off the last low, that last low coming in at July 12th. So we'll go from the low out there. The low on July 12th was at 1554. The high that it put in when it came all the way back into the 50-day exponential moving average, that is what is keeping gold in its place right now. The 0.618 area is where it exactly traded down to this morning. 1564. Was the price point on that. Gold trading down to 1562. So gold actually trading pretty well here, especially having King Dollar up. Of course, it sort of makes sense with all the fear out there. And you know what assets is it that people want? Hard assets, including real estate, silver, gold, and, of course, good old King Dollar. Speaking of silver, hi-ho silver, let's go see what silver is doing out here. Silver trading down at $26.80, not holding up as well as gold. If we take a look at the retracement off the last low to the high, the last low also coming in on July 12th, that price point at $26.42. If we go from that low to the high that was put in here on July 17th, the 0.786. So 0.786 area has held. That actual price point is $26.67. Got down to $26.61, but it's pretty much trading near its session lows out there. I expect that what we'll do is we'll see silver, which is acting a little bit weaker, trying to get back and perhaps test the 26.42 area next. If we go take a look at light sweet crude, let's see what light sweet crude is doing. Pulling back nicely here after making a breakout, a nice breakout here. So you got light sweet crude, and this is setting up for a trade here. Not now, not here right now, but it is setting up for a trade. Let's go see what that would look like. You would be going from your low that you had in light sweet crude June 28th up to the high that was put in on Thursday when it made a high of $92.94. Now, you'll see that black line along the screen here. That was the session lows going back to October 4th, that high out there being $78.40. So you got wide price spread today. You've got oil light sweet crude trading at its session lows. The first time that you want to be taking a look at this is probably in the 83.26 into the 84, 87-ish range, and what you'd prefer to do is see some type of intraday pattern out there. So light sweet crude pulling back nicely out here. If we take a look at bonds, James Bond 007 headed to the moon out there. There must have been a James Bond movie where they went to the moon. What was that? So, you know, that movie is in play today. So let's go take a look at the continuous contract here on the 30-year Treasury, trading out at 152. Moonraker, there we go. So we knew we had to, thank you, Al. So we knew we had to have a James Bond movie episode here. And Bond's trying to take out the highs, may have taken out going back to June 4th. That high, 152.19. You're traded at 152.21. What does that set up? That sets up a boat ride for Larry Pesavento with Tom. I think I might just join them just for the heck of it. Now, if you just simply take a look at the last retracement expansion, isn't that probably oxymoron or whatever that is? Let's just take a look at the last expansion of swing points. Just to say it properly, Steve, on the daily chart here, you'd go from the high of June 4th, that's 152.19, all the way down to the low of the trading session on June 11th at 146.28. The 1.272 expansion takes you to 154.05. Where we suspect that the bonds actually want to head to is in that 160 range. And the easiest way to take a look at that is really go to the longer-term chart, go to the monthly chart out here. And if you take a look at the monthly chart, what you'll see is a nice expansion off of a set of swing points out here. That set of swing points being the high from December 2008, when you had the bonds trading out at 141.27 down to the low that was put in on June 30th, 2009, out at 111.215. Take a look at the 1.618 expansion of that, folks, and what do you have? You got Tom's 160.16. That is where bonds want to head to. Take a little while to get up there, but that is where they are headed to post-haste. Let's go take a look at the ETF indexes out here. Let's go take a look at the small caps and see what the small caps are doing. Let's see what kind of volume we have in here this morning. The IWM gapping down, making that A to B equals CD. Now, the B point on the small caps, the IWM, is June 12th. That low is 77.59. Has 55 million shares. Market has been open and trading here for 18 minutes, 4.8 million shares so far. So if you could keep up that straight line math, you would be doing about, you would have a major volume day. You'd be 100 million plus type range. I don't suspect that that's what we'll do, but you do have the small caps now trying to close the gap out there, which it hadn't been able to do. That gap was from June 28th. The high of that is 77.37. Let's go to Robert in Chicago. Robert, thanks for calling. Thanks for holding.
Oh, thanks for taking my call.
My pleasure. How are you today?
Oh, it's going to be steamy in Chicago today.
No. Come down to Florida. Join us in Florida. It's nice, nice and cool. Of course, last night was a little bit sticky, I have to admit. But so you wanted to go to Dunkin' Donuts?
Yeah, I bought Dunkin' on Friday.
Yeah. Do you have a favorite donut?
Glazed.
Glazed donuts. All right. We're coming back, folks. We're going to go have donuts with Robert. Glazed donuts. Get your Tiger Butterbrew coffee going. That's a nice addition to a glazed donut. So we'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Have the Dow off 228 right now. S&P's off 24. Composite off 68. Small caps down 16. Peet's Coffee, P-E-E-T, up 16 bucks and change. $28, 28% out there. Does Peet's have a buyout? Going to be taken private, okay, by John A. Benkeiser for about, what does that equal dollar-wise? How much? $1 billion. Robert, you got $1 billion?
Not yet.
You could have bought Peet's Coffee to go with your Dunkin' Donuts.
Yeah, it's not bad.
All right, so we're taking a look at Dunkin' Donuts with Robert in Chicago. You went ahead and bought it on Friday. How can I help you here?
Yeah, so I got stock already today, so I'm trying to enter in this, and where would you enter it, or would you even touch it?
Right now, what I would do is I'd wait for it to give you some type of signal. And so if we take a look, if we just rip it apart here, take a look at ABCs, take a look at some swing points. Let's take a look at what Dunkin' Donuts actually is doing, what it did on Friday. So Dunkin' Donuts had made an A to B equals CD up, made a 1 to 1.272, A to B equals CD up, and it completed that on June 19th. Then it's making it's making an A to B equals CD down. Now, it completed a 1-to-1 A to B equals CD down on Friday. But as it was doing that, you really had price really moving into your D point. That D point, the price projection was 32.50. Now, it was also, that was the first time that it was crossing a swing point. That swing point was June 28th. That June 28th swing point had 1.9 million shares. On Friday, as you came through it, you were coming through with 2.3 million shares. So you were coming into a D point, and you were coming in with volume, and you were going through the B point there, and that told you that what it really wanted to do was go seek lower price. Now, as you continue to go over on the left-hand side of the chart, what you can also see is that what happened on Friday, it was coming into the swing point, actually just stopped just shy of it. The swing point, the most recent one, is June 4th out there. Just like in our markets here, if you take a look at any of the ETFs, you know, that's where you see a market change. Now, that high was 32.02. 931,000 shares. Dunkin' actually gets down to 32.07. Stops just before it with 2.3 million shares. That's a dangerous thing out there. What Dunkin' has done today, it has gotten into that swing point, that June 4th area. Volume today, 256,000 shares in the first 26 minutes of trading, going against 931. It's coming into that swing point with too much volume. If it takes out that swing point, you're going to be able to buy this at the $30.11 type mark. So why don't you just be patient out here? And what you'd also want to do is you'd want to be getting the market, you know, making a reversal and trading in the same direction. Does that help?
That helps a lot. Thanks very much, Steve.
No, my pleasure. So, you know, watch Dunkin' Donuts as it gets through this price point area. Okay.
Sounds good. Thanks, Steve.
You bet. You have a great day.
You too. Bye-bye.
Will do. Let's go see, so you get trading down. You've got Priceline leading, charged off 17 bucks and change. Intuitive Surgical having some brain salad surgery here this morning. They're off another 3% this morning, off 15 bucks. Chipotle down 10. Apple off 13. We took a look at Apple out there. Let's go take a look at... Let's go back to the ETFs out here. Let's go back to the daily ETF. Let's go take a look at the SPYs, see what the SPYs are doing out here. You've got the SPYs trading out right now at 134.10. So the SPYs coming into the swing point, most recent swing point being July 12th. That swing point, 143 million shares. You're in it right now with 26 million shares in only 30 minutes of trading. Stay tuned, folks. Tom and I will be up next. Then we go to Basil Chapman, Larry Pesavento, Daryl Martin, David White, Ken Shreve, back here from 4 to 6 for the Tom O'Brien Show, folks. Have a great morning. Look forward to seeing you tomorrow or just in a few minutes.